Hello traders, it's Douglas here. Today we're going to talk about a little known strategy that can help you improve as a trader. So we took this trade on the CL in oil, okay? We took that today and I want to show you what I was looking at to back up this trade. So over here, we've got Bookmap. And then to the right, we've got our chart. Now, if you take a look at our chart, I've set it up to where you can see about what I was seeing at the time that I got in on this trade. Now, if you look at the chart, we've been moving up pretty much all morning long. And then we were slowing down a little bit. We started moving a little bit sideways. Now what we're looking at here with these lines, this is the VWAP, and these are just a deviation away from the VWAP. I just kind of use that to help me visualize what's going on in the chart. And so what you would think here is that you do not want to go short. Not a bad thought. At the end of the day, this did keep going up all day long, but I'll show you why I did go short. So if we come over here in Bookmap, Bookmap is what I use to actually make my entries and exits. Okay, this is where I execute my trades. Now we got in around 827. That's what this little triangle is. I hope you can see that. You can see my target down here is 15 ticks away. All right, now up here, you can see this highlighted zone. So what that's doing is telling you that there's some liquidity there. Liquidity being there's traders with limit orders waiting in the book. They're resting in the book. Okay, they either want to get filled or they want to drive price in a certain direction. And that's what they're doing. And then how long it's been here is how long those traders have been waiting. So they've been waiting there quite a while. And we came over here, price came up to that area and then dropped down, came back up, approaching that area again. But I got in before it went all the way back up, and we'll look at that in a moment. It may blow your mind if you've never seen this strategy before. Now this mess down here, this is the blue, our iceberg orders. Didn't really take those into much of account on this. We had this nice big down iceberg here. So that could be some kind of indication that the big boys might be getting ready to take a little bit short or might want to get in a little bit short. We had this red is stops. So this is actual stop runs, stop hunts. This is when stops get hit. This comes up and that happened back here right before price started tracking down. So these are a couple good signs that we might want to go short. And then this last line here, this is the CVD or the cumulative volume delta. That's been tracking down for quite some time. So that means that there are more aggressive sellers in the market right now than buyers. Now, all of these things on their own are not enough to make an entry. These are just kind of market indicators of strength. Okay, so when we put these all together, we're looking at a certain strength in the market, and to me, everything is pointing down, right? So we've got our stop run, we've got our icebergs pointing down, we've got our aggressive orders going down, and then we've got our limit orders or limit sellers are heavy up here in the book. There's not very many limit buyers in the book, so there's not a lot of buyers in the way to stop this price from going down, but that isn't the secret. All right, the secret is we come over to ETFs. Okay, so if you get in on the large ETFs, they are much bigger in terms of daily volume than futures are, and so they can drive the market and they can give you an advanced notice of what may be about to happen. All right, not a lot of people know this, but this is what I do to get an edge. So if you saw my video from yesterday, there was a good setup in UCO. Now UCO tracks basically perfectly with the CL futures, but there's not a lot going on here. We had a little bit, if you can see this little highlighted area here, those guys got taken out or filled a little bit earlier, around 8:18. I got in around 8:27 in this area. Not a lot going on. There's a little bit of sellers here. However, USO is a much bigger ETF. Now, sometimes it deviates away from the CL futures, but it is the overall, I believe, the overall driver of the market at the end of the day. And if you look in USO, it is clear, anybody could see this, that the sellers are the big dogs in the book. All right, there's almost 12,000 here at the $25 level in USO. There's not much buyers going on here. Okay, if you can see that, you got one level down here, this Sirius that's been sitting in here for a while. They're only 1,400. And then if you go down even further, you've got about 1,800 down here at 24.51. Now, I say this repeatedly, but what you don't know is if these sellers here at 25 are going to drive the market down, at least temporarily, or if they're looking to just get filled. Sometimes they just want to get filled. So this is obvious because this points out every possible scenario, but price could come up here, not get through them, bounces down and drives the market down. The other scenario is they want to get filled before they drive the market down. So they get filled, price moves up a little bit and then starts dying out, and then the move starts happening. That's what happens when you get into the market and then the market goes against you just enough to knock your stops out and then goes in the direction that you thought it was going. Typically, it's because these guys wanted to get filled. You played in that area. You didn't know you were playing in that area. And they got their fill by taking you out because they're a bigger player and they need your stops. And then once they get their fill by taking you guys out, they can start moving the market in the direction they want. And then, of course, the final scenario is they're just going to lose and the market's just going to go up through them, okay? So what you're looking for is not a guarantee. You're just looking for an edge. And so with the fact that this was 12,000 sellers sitting here at 25, price had already bounced off of it once, and everything we had already covered over here in CL with the aggressive sellers being down, the iceberg orders being down, the stop run already happening, to me, it looked like a good deal to put on some risk, all right, to take the risk. So let's play it out. You can see what happens. Price does go against me just a little bit there. And I was prepared for it to come back and test this level here if it needed to. That was going to be fine with me. I was ready to take that much negativity against my trade. But fortunately, I didn't have to deal with that. And then price just gets weaker, gets my 15 ticks. And then lo and behold, this is the next level of interest right here at 32.52 in the futures. And if I remember correctly, we should come down and test that before we start going back up. So I think I could have ended up getting 30 ticks out of this if I was perfect. But I'll take my 15. So there we go. We hit that level. And then we start working our way slowly back up. And it bounces around in here for a good part of the early morning before the market does end up going up pretty much for the rest of the day. So we'll speed that up quite a bit. And if you notice, the CVD again is tracking down, tracking down, tracking down. The market got near these sellers again and then bailed out for a while. So that would have been a good place to get in again. I mean, if we go over here to the chart, you can see what happened. This was my trade through here. And then if we keep going, you can see it going back and forth for quite some time throughout the day. So you had these buyers come in, they kind of lifted it up, it gets back to these sellers again, and so on and so forth. That's how you end up in a range. So if we go over here to the USO, what do you know? Price comes down retests, it doesn't retest, it starts to test this area down here. These guys, if you remember earlier, were about 1200 in the book. Now they're at 5200. So they got stronger. Price came down, couldn't get to them, starts going up again, gets again near these 12,000, doesn't come all the way up. That's kind of the tricky part, is you never know if it's going to come up and touch, go through, get scared, go down. Trading is a difficult game, but you can see this is why it is in a range. Nothing about MACD indicators, nothing about RSI indicators, nothing about a candlestick pattern. None of that was the reason that we got stuck in a range. We got stuck in a range because there were sellers and there were buyers bracketing the price, keeping it in a range. So that's the real deal when it comes to trading. Like I said, you're not going to be Nostradamus here, because they're still going to play the game, and you got to take the risk when you can, but at least you know what's actually going on. All right, so I recommend this to everyone. Try to figure out what's actually going on in the market, not what some stupid candlestick tells you. All right, so if we go over here to UCO, like I said, UCO pretty much tracks perfectly with oil most of the time. Nothing is ever perfect, but most of the time. Comes down, bigger highlighted area of buyers, bounces up, bigger highlighted area of sellers, bounces down, and that's the way the game goes. And if you'll notice, more and more buyers are coming in down here. Sellers are kind of bailing out up here, and if we can track over far enough on the chart, that's what happens throughout the rest of the day. So that would have been fun to play. One of these days when I'm a full-time trader, maybe I'll be able to take advantage of that. But that's it for the video, guys. If you have any questions, let me know in the comments below, and please, please do not forget to subscribe. Take it easy.